My name is Mark Kunkel. I'm with the Power Kunkel Group in Wyomissing, Pennsylvania. We're an employee benefits firm serving approximately 450 local employers. Currently a member of NAHU, National Association of Health Underwriters, and SHRM, Society of Human Resource Managers. The main mission of the Affordable Care Act was to standardize things and make it easier to navigate the insurance industry and the marketplace, i.e. exchanges. So, part of the goal was to provide universal coverage for all and make sure that everybody had coverage, create market competition, fair premiums, also create efficiencies, and also consumer protections. And we'll address some of those things as we go through the program. First thing that an employer needs to do is determine whether they have 50 full-time equivalent employees or less. That will determine whether they need to comply with the employer mandate, also known as the pay or play. That has been postponed, however, till 1/1/2015. As a small employer, you are not required to continue to provide coverage to your employees. So you can continue as is. You can look to the SHOP programs as an alternative. Also, drop coverage altogether and have your employees look to the private insurance market or to the marketplace, the exchanges, and have those folks determine whether they're eligible for a subsidy or not based on their income levels. The other thing with regard to a sole proprietor, the small group market is defined as 2 to 50. So a sole proprietor with no employees does need to comply with the individual mandate. And the individual mandate for 2014 is the greater of 1% of their income or $95. So under the Affordable Care Act, just to restate, the individual mandate is still targeted for 1/1/2014, which means that all individuals, with a few exceptions, must be covered through employer insurance, employer coverage, coverage that they secure on their own in the private insurance market or out in the marketplace or the exchange. And if they go to the marketplace or the exchange, there is the potential for a subsidy based on their income levels. Currently, the law is written that anybody that is working 30 hours or more will be considered a full-time equivalent employee. For anyone working less than 30 hours, you total up all those part-time employees and divide it by 120 to see how many full-time equivalents you have for the month. You have the opportunity to establish a measurement period, a stability period to help you figure out when you're going to take that snapshot in time. But that's important that you do that to determine whether you are under 50 or over 50. In saying all that, the pay or play, the employer mandate, has been postponed to 1/1/2015. Anybody that's close to 50 full-time equivalents, even if there's a collective bargaining unit involved, they count, and common ownership rules apply as well. Would recommend that they get a tax professional, their insurance broker, use some calculator to determine whether they need to abide by the pay or play provision, the employer mandate, shared responsibility of the Affordable Care Act. So once they determine that they're a small business under the Affordable Care Act, less than 50 full-time equivalents, they would want to secure census information. Census information is a little different than what it was prior to 1/1/2014. So you need date of birth, how a person potentially would enroll, single, employee and spouse, employee and child, children, family. And then from that census data, you can secure proposals from the private insurance market, from the SHOP program, and also entertain the individual or the private exchanges in the marketplace or the individual market. So there's a lot of things to consider. Again, the recommendation again would to secure the advice of a professional to help you navigate through that. There's going to be some standardizations of the plans which should make it easier, but the carriers will have different rates from carrier A to B to C. The rates will be different, so it's important that you continue to shop the marketplace. There was language put into the bill with regard to essential benefits. And essential benefits addressed of a slew of issues, from extending coverage to dependent children to age 26, the elimination of pre-existing condition clause, rescissions, required employers to limit their waiting period to no greater than 90 days. Notice of exchange, announcements that the exchanges will be available to them 1/1/2014. Those announcements are due out by October 1st of 2013. And then it also removed some annual limits and some lifetime limits that were built into the insurance programs. Compliance is going to be a big part of the Affordable Care Act, so employers need to know what's expected of them, and if they're not sure what's expected of them or how something's going to work, they need to reach out to the various resources that are available to them. And that could be their tax advisor, it could be their broker, could be a government website, could be a carrier website. But if they're not sure what's expected of them, that is not going to be an excuse that I didn't know. So there are some penalties involved if you don't comply. And one of the major first pieces of this for an employer is this announcement of the exchange. And again, it's the announcement is due out October 1st, 2013, unless it gets postponed, but that's the target date as we stand here. And then the exchanges are supposed to be up and running 1/1/2014. There's different level of coverages that will be available in the individual market, the private insurance market, the SHOP program, and then the marketplace, the exchange. And their actuarial equivalents. The fancy names are platinum at 90% level, the gold at 80%, the silver at 70%, and the bronze at 60%. Those percentages are a percentage of total cost of incurred benefits. So the carriers at the moment are trying to set up plan designs that match up with those actuarial values and then obviously attach a premium to those. The goal is to have some standardization of the plans. From carrier to carrier, it's still going to look different. So if you need assistance in evaluating what the best options are for you or your employees, you can continue to use your insurance broker. You will want to make sure that they have access to all the programs that you want to investigate and are licensed properly to do so, or certified properly to do so. But yes, you can continue to use your broker if you have a broker. And that would be recommended because while there's going to be some standardization, there's still going to be a lot of choices. Education and evaluating and trying to figure out what, again, is best for you or your employees, you might need the help of an outside source. Insurance companies will continue to have underwriting guidelines, and one of those underwriting guidelines will be participation. Today, most of us are familiar with you need 75% of your eligible employees to participate, no less than 50% of your eligibles if they have legitimate waivers being covered somewhere else. We are anticipating those participation rules with the various private insurance companies to change in anticipation of 1/1/2014. The SHOP program does have a 70% participation requirement. So as you go through and investigate plans, you'll want to pay attention to the underwriting rules, participation rules, items that may be exempt from coverage. So while there's still some standardization, there will be differences in the policy language. I think it's very important for businesses of all sizes to know what their options are. This is going to have a significant impact on the private health insurance medical industry. There's going to be new options. I think there's going to be some creativity evolve out of this with regard to alternative funding, and alternative funding is a form of self-insurance, perhaps not appropriate for employers under 50 employees, but certainly from 50 to 99 and above, alternative funding, self-funding should be an option for them. But specifically with regard to 2 to 50 employees, you know, there are options, and you want to make sure that you're getting the best from, and I'm using the word marketplace, and that in this conversation is, you know, the exchanges, private insurance, the SHOP program, and explore and understand, continue to learn. This is still going to be a moving target to some level, and you need to try to be prepared. And being prepared, that means do not panic. but you need to be prepared and make sure you know what your options are and that you're doing those things that are consistent with your business objectives and your benefit philosophies. And for some, their benefit philosophies are going to change from the level of coverage that they're providing and to their expectations of what employees are going to contribute toward those premiums and what employees are going to contribute on behalf of having their dependents covered as well. So there's a lot to think about from a coverage standpoint and making sure that it's consistent with your objectives. And also, I alluded to it earlier, is the compliance piece of this is somewhat daunting, and you need to make sure that you're on top of it and understand what is going to be required of you as an employer.